Hello everybody, welcome to our question practice. This time it's AQA Unit 3, June 2011. Okay, let's read the first paragraph. It says, Lens does not keep a full books of account. Whenever it says does not keep a full books of account, that means it's an incomplete record. He has, however, been able to provide the following information. Okay, we'll straight down go to our requirement, and requirement is prepare an income statement, trading and profit and loss account for the year ended 30th April 2011. A balance sheet not required. Well, just before we go ahead, you need to bear in mind for an income statement, we need sales, we need purchase, we might need some expenses or income, and there could be debris, there could be profit loss on disposal, quite a few items. Just now let's read those items. What's been given? You've been given with bank statement, bank account for the year 2011, and it's just a T account. You can draw it like this. It's the credit balance, overdrawn balance, and it's an overdrawn balance. This balance CD will be balance BD there. Okay, so balance BD is good to write down these things. And during the year, they gave us some assets and liability information. 2010, this is your opening. 2011, this is our closing information. Okay, what information given? Cash, equipment, opening, closing, inventory is given, rent and rates, that goes into the income statement, trade payables, receivables, will use it for purchases and sales, and vehicle, two assets. So if two assets are given, so obviously there should be depreciation on both debris of equipment, yep, and debris of vehicle. Okay, and then number 3, it says cash sales for the year. So credit sales along with cash sales, two things need to find out. The following cash payments were made. Some general expenses goes straight to income statement. Purchases, this is a cash purchase, and drawings. It doesn't go into the income statement, but for balance sheet purpose, we could use it. Okay, it says Lens suspects that a dishonest employee may have stolen some of the cash. So we will work out cash stolen. And a vehicle sold for that much. That means we received some money. Net book value was 2420. There's a clear loss. We can do some working. Loss on disposal. And if you get ready your calculator, the loss is 620. Goes into the income statement as an expense. Okay, no equipment was purchased during the year or disposed. Very good. Goods sold during the year, 60% markup. We might need it. They don't give you information just like this. We might need it. No record has been kept of the amount of goods taken by the owner for personal use. It's the drawings. Now, the 60% markup, we might have to do a mini trading account for the goods drawings. So bear in mind goods drawings. Goods. I would say pretty much that's it. Yeah. So there's no income so far. We'll have to do an expense account. Excuse me. Okay, let's start with our workings. Workings number 1, I would start with sales ledger control account to find our credit sales. It's a debit account just like trade receivables. Okay, here is our balance. No, not this one. Balance BD, opening and closing. Balance CD, this one for trade receivables. So okay, BAL BD, somebody sign here. 2640. 2640. BAL CD is 3120 on the other side. As we know, as soon as we get balance CD, it becomes balance BD on the other side, 3120. Okay, any money we received from trade receivables from bank account, yes, receipts from trade receivables 27450 is on the credit side. 27450, pretty much that's it. There's nothing else. We're looking for a credit sales. That's our balancing figure. Doesn't matter, we'll look for the bigger side this time. Is your credit side is bigger, add up these two, and this two gives you something. If you add in your calculator, is 30,570. So we would write the other side, 30,570. Take it to 640. You are left with 27930. That's your credit sales. Okay, now we have some cash sales, if you remember. Yeah, there you go. Cash sales 35,750. So credit sales is 27930. Cash sales is 35,750. If you add up these two, you get 63,680 is your total sales. That goes into your income statement. Okay, then our total sales is 63680. Now we are looking for a purchase. We need to do purchase ledger control account. It's a credit account, so balance BD on the credit side, and this is your balance BD 1980, and then you do balance CD on the debit side and 1295 both side. Oops, 1295 balance BD. Any money we paid from bank account, have a look, 39670, and pretty much that's it. There is no more contra, no purchase return, nothing. Okay, so we will check which side is bigger. We can see the debit side is bigger. If you add these two items, you get 40965. You write the other side. Oops, 965. Take away 1980. 38985, and that's your credit purchase. That was the balancing figure. We have cash purchases as well, so credit purchase was 38985. You have cash per let me look for it. This is given somewhere here. There is your cash purchases 2100. You add up these two together, the total purchase is 41085. Okay, number 3, rent and rates. It's an expense. We have done our sales, we have done our purchases, now expenses. I can see there is one expense, basically rent and rates together, and from the bank we have paid some rent, use it. We have some closing rates and opening rent, advance and accrued. Okay, if you remember our mnemonic for this type of questions, which we call PAPA, Papa ALLA, Papa Allah. Okay, so Papa Allah, this is your opening, this is your closing, CLO. Okay, okay, so we have prepaid rates. This is closing, so closing prepaid is less. So T account you need to open, debit account, closing prepaid we need to less, and closing is balance CD, and the CD amount is 470. On the other side, balance BD 470, and rent accrued, this is opening accrued, it's less as well. If it is less, as it is opening, it should be balance BD. Why I'm writing on the credit side, both of these are less, that's why credit side. If it add, it's on, should be on the debit side because this is a debit account. So balance BD is 535. Okay, how much we paid? This is the amount 7,300 we paid from our bank account, and pretty much that's it. Yep, we'll check which side is bigger. 7,300 is bigger. Take away these two items. The balancing figure is here. We call it income statement, and the balancing figure is 6,295. That's your rent and rates goes to the income statement. Okay, so rent and rates, we got our sales and purchases. Now we got expenses, which is rent and rates. Let's look for depreciation. Okay, there are two items of assets. We'll start with equipment. Okay, so W number 4, depre of equipment. Now, equipment opening and closing net book value given, and at the bottom they told us no equipment was purchased or sold during the year. That's all right, that's good, no problem. So we will open an equipment account. It's a debit account. So balance BD, which is the opening. Here you go, 3720. Then you get balance CD, 2975. On the other side as well becomes balance BD, 2975. The biggest side is 3720. 3720. Take away this figure. The remaining figure is 745. I think so, 745. Just double checking with my calculator. 3720 minus 2975. Yeah, 745 is depreciation. Okay, depre of equipment. Now, depre of vehicle. We will open depre of vehicle. Okay, we're going to open a vehicle account, and this is a debit account yet again because this is an asset. Okay, so if given with net book value BD CD, BD on the debit side, val CD on credit side, the other side it becomes val BD. Okay, we have a disposal. Some of the vehicles we have sold. Now we sold for 1,800. That's what we'll not consider. The worth of the asset we sold is 2420. Should go here, 2420. You're knocking off from your vehicle account. Disposal. And that's it. You look for the bigger side. I see debit side is bigger, which is 20550. Should be both sides. Take away these two items. Inside you get income statement. That's your depreciation. 3600 is the depre. Okay, you got a depre of vehicle, depre of equipment. So our depreciation is done, both of the items. Now we can do our cash stolen. Okay, have a look here. It said suspects that cash may have stolen because of some dishonest employee. Okay, so to do our working number 6, cash stolen, we got to do a cash account. And cash is a debit account. This is a current asset. anything makes up debit, makes down credit. We have balance CD and BD. Let's start with that. Balance BD, then balance CD, CD on the other side, bal BD. Okay, what is your cash opening? 340, and the closing 690. Okay, any cash in? We can see that there is at the bottom cash sales during the year 35750. So yeah, sales makes your cash up. It's a cash sales 35750, and quite a few cash outgoings. All these three items are going out. Gen expenses, Gen EXP 520, then purchases 2100, then drawings 6700. Okay, anything else from our bank account? You can see transfer from cash 23890. That means from cash credit bank debit. So it's a contra entry. Bank is 23890. Okay, 1 2 3 4 and 5 items are here. I don't see anything else which has been done through cash, and that's it. We will check which side is bigger. I can see the debit side is bigger. If you add the debit side, these two items, it gives you 36090. Right on the other side, 36,090. Take away 1 2 3 4, including the balance CD. Very often student does this mistake. You are left with 2190. That was our balancing figure. That is your cash stolen. All right, we got number 6, cash stolen at bottom. Yeah, cash stolen. One more working, I believe that's your goods drawings. They said taken by the owner, does not keep any record. 60% markup. These two are needed here. Okay, working number 7, goods drawings. Okay, let's look for it. Oh, my pound signs are too far. Okay, to do this, we will do a little trading account. Okay, so we'll start with sales figure, 2 column, then cost of sales. Under cost of sales, opening inventory, we have it, the figure here, plus purchases. We found it already at the top, just a little top here. There we go, purchases. We got a sales as well. Okay, let's keep writing it. Our sales is 63680. Opening inventory is here. There you go, 4740. Purchases are here, so 41085, and less goods drawings. That's our balancing figure. We don't know. Let's closing inventory. Closing inventory is 2975. 2975. Once you've done it, you get cost of sales, and sales less cost of sales, you get gross profit. Well, markup given, we got our sales. I'll apply my formula. Cost plus profit equals to sales. Cost is 100%, markup profit is 60%, your sales is 160%, and this time our sales is 63680 divided by 160 times by 100. I get my cost, and let me get my calculator. 63680 divided by 160 times by 100. The answer is 39800. You write down here 39800. Let's take it away from the selling price to get a gross profit, which is 23880. Well, that's not a concern. We will work backwards now to find out goods drawings. Okay, so 39800. This becomes plus, these two becomes minus. I get my answer here. Okay, plus 2975 minus 41085. Is it? Yeah. Minus 4740. Oops, what did I do? Okay, 39800 plus 297 minus 41085 minus 4740. And okay, something wrong now. 39800. What's going on with my calculator? Okay, again, 39800 plus 2975 minus our purchases is 41085 and minus 4740. Just give me a minute. Oops, I took a wrong figure. This is for net equipment. Oh, and very often a student does the same mistake. This is not our closing inventory. Our inventory is 5270. Oof. That's why it's wondering why it is not balancing anyway. So 39800 plus 5270 minus 41085 minus 4740, and the answer is 755 goods drawings. Now these are our maximum workings we need to do our income statement, and in our next video I will show you how to do the income statement. The main bit is done. Now it's just copy pasting.